She's going to talk about the pitfalls of insurance. What you don't know could hurt your claim.
Hello, everybody. Nice to see all of you all. I have seen a few of you at the OREA in that last couple of years. So I am with a company called First Call Claims. We are one of the largest regional public adjusting firms. And I wanted to just very briefly explain what a public adjuster is, because I know some people probably don't even know what a PA is, and just talk about First Call. And then the next I'm just going to talk about little things that we have seen when we have had clients and they've had denied claims or issues with the claims process because of things that they didn't know on their insurance policy. So actually one of our attorneys had put this together to say, look, these are some pitfalls, as we call it, want to make sure everybody is educated on. And this cannot just be rental properties. I mean, like you do need to know, even if you just your homeowner's policy, things that you need to know. So we have, First Call's been around 26 years now. We have done over 7 million claims. We have a team of folks. Short and sweet of it is we're advocates for the insured. So if you have a larger property loss, like the gentleman just said, you don't know. A lot of people don't know what costs are. You know, you get an insurance adjuster that comes and says, okay, well here's what we want to pay you for your loss. Well, many people are not really, first of all, don't understand the estimate itself, which is about 30 pages, but you also don't know what you're actually owed within the language of your policy. Most people don't even have their insurance policy. They just have the deck pages, which says structure, personal contents, loss of rents. But there's a lot of other things in that policy that actually can be paid out if you know how to read the policy. So why would you partner with not just First Call Claims, but a public adjusting firm? We are, as public adjusters, we have to be licensed in every state that we work in. So that's not always true with insurance adjusters. So again, let's say you did have a large property loss, you had multiple losses. You all are real estate investors, but you might also have day jobs. If you've ever had a large loss, you probably realize that it's pretty time consuming to deal with, to prepare the claim, to make sure that you have whoever you use as contractors, to meet with the adjusters. So it is a time saver. Of course, we're all licensed adjusters. And the ultimate thing is the higher settlement. We average a 58% increase over what the insurance company wants to pay the policyholder. That's our average when we get involved. So that is really the big kicker. So of course, that's a peace of mind. Difference between an insurance company adjuster and a public adjuster. Insurance company adjusters are employee trained and they're loyal to the insurance company. So they work for the insurance company. Their primary responsibility is to mitigate the insurance company's losses. So when you say that they're your adjuster, no, they're really actually the insurance company's adjuster. As a public adjuster, we represent the policyholder. Of course, we're going to look at the loss in the eyes of the property owner and to protect your interests. So I wanted to, again, 58%. So even after our fee, we're still 30 to 40% higher. More is more, and we say it's like if you hired us and we paid you to do the work. So I want to give a kind of an example, because everybody says, well, how can you do that? The one I always use is the insurance company's estimates are to replace or to repair. If you had an older home that had plaster walls, that insurance company's estimate is more than likely going to have drywall, or it might just have clean. Clean, replace, remove, put back. You might have carpet underneath hardwood floors. Well, that estimate probably says, you know, maybe you replace the hardwood, but probably not. Maybe the carpet, maybe not the padding. So it's little things in there that add up is where we get that increase. On top of the fact that we're also fighting for terms of loss of rents, because there's the language in policy always varies on what you're going to get for your loss of rents. You know, debris removal. anything else in that policy. So here's some examples of ones that we've done fairly recently. The one, Hamilton, was actually one of my claims in Lexington, Kentucky. The gentleman worked with his insurance company for about 4 months after I called him for 4 months, decided to utilize our services, and we increased his final settlement $105,000. The one at the bottom, CR, he has about 200 properties in Knoxville, Tennessee. He's a general contractor. So the rep there actually worked with him for about 4 months as well, maybe longer, trying to get him to work with us. But of course he was a general contractor, so he felt like he was very comfortable with what he was owed. But once we got involved, we did increase it another $334,000. Once we did actually do that, he said, you know what, we had a storm that came through 2 months ago and I got paid about $1 million. Would you mind going back and looking at my properties to see if they missed anything? And I think we got another $1.5 million on that one. So, but like you can see, we don't just do bigger ones. I mean, Title I management was a 13, we got it up to 19. So it's not just those huge losses.
Why was it denied?
The one that was denied, that was actually, that was West Egg. He's an investor in California, and he had some property, I think, in Memphis. That was a hotel. And they denied it because they said it was lack of maintenance. So in that case, I think they got an engineer out. A lot of times the insurance company will hire an engineer that they pay for to look at the property to argue that. So of course, as the insured, you don't realize that you can also get an engineer out as well to fight that. And then with us involved as well, creating the estimate, we did get him paid. So I think it was storm damage on a hotel, smaller hotel. This is the case study of the one where we increased it by 508. I just wanted to throw it in there so that you could kind of see what it looked like. It was 3 units, I believe. So as you can see on the bottom, that's what we call, that was where the fire actually started, which we call alligatoring, where you can see how bad it was. And then the other 2 rooms were a lot of smoke damage. So that's all I wanted to talk about us. I just wanted to make sure everybody kind of understood what we did and who we were before I started talking about, what you should have on your insurance policy. So before I start talking about that, does anybody have any questions? Yes, sir.
How do you get paid? Is it on a commission or is it an upfront? How does that work?
No, there's no upfront cost, and we only get paid if we can help you. So I personally look at probably 5 properties a day, and 1% of those can we actually help. But if we can help, we offer our services. You can utilize our services from the very beginning, which is what we recommend everyone do. And that's a flat percentage of the total, but it's and I'll go through this, it's actual cash value, not the replacement cost. So whoever is familiar with that, like let's say you had a roof, they pay you actual cash value and then you go back and they'll pay you the depreciation, which is the replacement cost. We don't fee on that. I know that was a little confusing, I'm about to talk about that though. But, or what a lot of folks like to do, which is what a lot of those were, is a supplement. So they'll come to me and say, Megan, they paid me this $174,000, here's my estimate, what do you think? And we'll come out and scope and estimate it, create our own estimate, and then get the adjuster to come out, walk with us on site, and we go back and forth until we can get it to what you're actually owed. And we fee off of that supplement increase. So not the original $174,000, the increase that we got. So technically it looks like it's a win-win scenario in that respect.
So we don't get insurance from you if
No.
we don't think we've got a good settlement.
Exactly.
We call you up and you come out and take a look at it. And of course, a lot of times you're going to say, well, it looks like you were okay.
Yeah, especially on the smaller losses. When you're talking about a little bit of hail damage on a rental house, usually not something large enough for us to get involved in, but we will give you some advice. if we see damage to any of the siding, any of the flashings or anything like that, most definitely we'll say, you know what, they missed this and this, look at your gutters, you've got hail damage on there, they need to fight that. If it's something about matchability, they don't want to cover the whole roof, which your roofer might have just talked about that. There are different laws in different states about matchability, so if they say we only want to pay for patches, you know, pieces of that, they actually, depending on the state, they need to pay for the whole roof. Because if you envision, if you can see from one area to the other and it's not in uniform, if it's not matching, then they have to pay that. I know nobody fights that because I drive around all the time and see patched roofs all the time. And I mean, it does, you see it, and it depreciates the value of the house because it doesn't, you can, over time, you can really see the difference between the shingles. So, or siding as well, they'll do that too. But no, exactly. You can call me up and say, hey Megan, what do you think about this? I can give you my opinion, and if it's something that we think we can help you on, then you can decide if you want to pursue it with us or not. There's absolutely no cost whatsoever with, you know, getting, you know, my opinion on that. So, any other questions?
What's truly interesting is you can open up a case after it's been closed.
You can, and there is a statute of limitations. Generally, it's usually 2 years because that's the time frame of when you can go to litigation. So it's usually a 2-year time frame. The only problem with that being is if you have completely repaired that property, it's very hard to go back and fight that because you basically said to them by repairing that was sufficient enough money to fix it. Even if you had to go out of pocket to do it, which I've had a lot of people that have experienced that. So you really do kind of want to get on it up front. But I mean, if it is something we can, we have been able to fight it with pictures, but it's really hard. Especially if, and that's one thing I want to recommend everybody do, is take your own pictures of the loss, because when the insurance company does that, that's their property, and they're very, very not receptive to you asking for that, especially if you're going to go back and try to argue it with pictures. So you definitely want to have your own pictures.
You said something about the 2-year statute of limitations, about litigation?
Yeah.
How are they related?
Well, I mean, that's why usually after 2 years you can't, because if you argue a claim with an insurance company, there's a process you have to go through before you can even sue the insurance company. You have to do an appraisal process, and then if you don't agree to that, you both have to get an umpire. If you don't agree to that, then you can take it to a lawsuit. But so there's a time frame between that anyway, so you really don't want to go that route. I mean, unless you absolutely have to. And when we get involved in losses, we can tell pretty quickly if it's something that's going to have to go to litigation, and we'll let you know. And it's probably something that we'll just recommend you getting an attorney to do. Now we can help and give you a competitive estimate to present to them to fight. But if it's something that you know it's going to have to go to litigation, and a lot of times those are because of the language in the policy and arguing that. Some of the language in policy, sometimes if it's very vague and ambiguous, it usually favors the insured. But they make that language like that for a reason too, though.
Any opinions on specific insurance companies that tend to be better or worse when it comes to
people ask
dealing
us that all the
honestly?
time. We have, and I was going to show that too, I've got it, all the insurance companies we've worked with. I can tell you no, they're all about the same, and I don't endorse any insurance companies, obviously. I do network with a lot of brokers, and that's what I recommend most people use, is someone that sells all different types of insurance. There are 3 that we have worked with them, but they're usually better upfront with their estimates, and it's Chubb. But they're more expensive. CHUBB, Chubb, Fireman's Fund, and oh my gosh, USAA. but I mean, don't hold me to that, so I'm not, they're more expensive. So, yes, sir.
You may have already answered this, so it may not have been in here.
Uh-huh.
Is your service fee-based or percentage-based?
No, it's a percentage, and it's of the actual cash value of the settlement, or if you come in on the back end, which means you already have an estimate from the insurance company on the supplement, on anything we get above or beyond.
So if it was 15, you guys did it up to 20, then it's percentage of that 5.
Right, but if that example is great, because that would be something we wouldn't get involved in, it'd have to be a larger loss than that. But yes, exactly.
The insurance companies know that you're hired by a customer
Uh-huh.
to represent them. Is there an adversarial relationship between you and the insurance companies? And what percent of the time you're able to negotiate with them and settle it before it goes to litigation?
To answer your second part first, we probably had to go 5 times in the last, 20 years to litigation, because we don't want to get involved in claims that we know is probably going to go down that route. So, but the second part, okay, so what's your question again? What was your first part of the question?
Do they see you as adversarial?
No, they do not. We always say they don't give us Christmas hams, but they know that you are legally entitled to use a public adjuster in pretty much every state in the United States. So it's just like if you used an attorney, if you had to use an attorney, you have a right to use it. We've never had anyone be dropped by an insurance company for using our services. Generally, insurance companies look at a couple of things when they're looking at policies. One is how often you've had a loss, and the other is the location of the loss. So we've never had anyone, lose their insurance because they've used us. Now, we've had them lose their insurance because they've had a lot of losses and they had a really bad fire, and the insurance company was going to drop them anyway. But there's about a gazillion other insurance companies out there, so you can always go with another one. All right, I'm gonna this is pitfalls of insurance. So, I know a lot of you all do rely on the bottom line. It is about money and how much your premium is when you have rental property. So, we say, you just got to do kind of cost analysis on what you want, if you want, and how you want your property insured if you do have a loss. All of this stuff is going to kind of sound like duh, but you'd be surprised how many times we've seen folks that just didn't realize things. So you do want to read your application very thoroughly, because if you ever go back and have to dispute a claim, they will pull your application to find anything in there that might be wrong to deny your claim and say, well, they actually put this on here, so they really shouldn't be insured. So you just want to make sure that what you're putting in there is accurate. A lot of you all, replacement cost versus actual cash value. How many of you all probably first know the difference between, and I'm sure most people know. Replacement cost is the amount it would cost to rebuild your property with today's prices. Actual cash value is replacement cost minus depreciation. And of course we know what depreciation is. Depreciation can account for age, wear and tear in the overall property, the condition of the property. So we always recommend folks to have replacement cost policies, but I will say, I was discussing with a gentleman back there, if you have a property as a real estate investor that you bought it for, let's say $30,000 and you've got 50 coverage on it, and you only have actual cash value, if that's a property that you don't feel like you want to keep, or if it burned to the ground, you'd be okay with just getting probably 35 or 40, which is what they'll give you for it, and move on, then that's fine. But if you actually want to rebuild the property, you wouldn't be able to rebuild it for $50,000 more than likely. You want to rebuild it, you want to kind of take an idea of $100 a square foot to be able to have your property insured. So if you had replacement cost and you were insured for $100,000, they probably only want to pay you $70,000, but you can go back and get that depreciation once you rebuild it. So it's just something that you want to think about. I personally would recommend on anybody's own personal property, but
That $100 a square foot, that whole area under roof?
No.
Including garage, or how do you do that?
no, not garages. Basements are always going to be a little bit less. Yeah, in this region, that's what we suggest. If you had like granite or something like that in your home, obviously you're going to go higher than that, maybe 150. And if it's in, depending on the area of the home, is to maybe even down to 85 square foot. But that's kind of our rule of thumb. So that's one of the big things is underinsuring your property. But the reasons why people do it, like I said, is it lowers your premium. So, you know, if you've got a lot of properties to insure, you want to make sure that your premiums are as manageable as possible. So the reasons people do that is because you insure it for what you paid for it, or you insure it for what you have on your mortgage. So if you had a $30,000 mortgage and you're insured $50,000, you know if it's a total loss, your mortgage company's going to take that $30,000. So you're left with whatever's left on that anyway. So you're basically left with whatever it costs to tear it down, which is probably, I mean, I've seen it up to $25,000 to tear down, depending on the house. So. So, do most of you all get loss of rents on your policy? Good. Highly recommended. So, if you have, this is business incomes more if you have like a commercial property. But if you have loss of rents and you want to rebuild your property, generally loss of rents is stated, sometimes I see it as just a flat number that they'll pay you up to. A lot of times we see it as 12 months or a reasonable time to rebuild. But all you have to do is give them your lease and they'll calculate that for you and pay you every month while your property is being rebuilt. So I see a lot of folks that are like, well, I don't care, I just want to get it done, I want to get it done, I want my tenants back in. But if you could wait and get paid accurately and get paid your loss of rents while you're doing it, why would you want to rush? Because the insurance company wants you to rush. They want you to get rid of all the evidence so that when you come back and you say, wait a minute, you owe me more than this, it's already gone. So I highly recommend getting loss of rents. Vacancy is a huge one. If any of you all have property that's vacant more than, I think it's 60, some of them say 60, some of them say 30 days. So that 31st day or that 61st day, you have a fire or a bad tornado comes through, you're not insured. So if you have property that is vacant often, you want to have a vacancy clause. Or what you can do, if you buy a house and you're rebuilding it, or not rebuilding, but like rehabbing a home, you can have the vacancy policy, and then once you have a tenant in, you can change it over to a regular policy. But it's an endorsement to have the vacancy clause if you just have a house that just tends to be vacant more often than the others. I would add it because it's not that much more, and you know, if something does happen while it's been vacant a certain time frame, you're screwed.
Would that still be true if you have a double and one side's vacant for that period of time?
Like a duplex?
Yeah.
Well, how is it insured? Is it insured under one policy?
Yeah.
I don't think so then.
Okay.
Yeah.
Because I have one that when it becomes vacant next,
Right.
I've got some repairs to put in, and it might be vacant for that period of time to bring it up to a level I'm satisfied.
Yeah, yeah.
You have to take a different type of policy out when you're doing a rehab, so when you have active construction going on, versus just carrying whatever policy you had, not letting your insurance agent.
Yeah. Yeah, you do need to, because I've seen it happen many times. You want to tell them you're rehabbing it because technically it is vacant. So if something did happen, it wouldn't be covered. So you can just change it over to that policy while it's being rehabbed, and then just tell them once you've got it rented back out. Yeah. And if you all have good agents, they should be telling you all of this anyway. So a lot of them just don't know. Yeah, so that's what we recommend. Codes coverage is a huge one. If you will have property that's older than 1980, and you haven't had it rehabbed since, more than likely it's not up to code. Your wiring's probably not up to code. So if you had a fire and you were rebuilding it, you have to get it up to code. So there is it's called Ordinance and Law, which is right there. It's an endorsement in your policy, and it's a percentage of your structure. So if you were insured for $100,000, then if it was at 25%, you would have an additional $25,000 to get your property up to code when you rebuild it. It's a whole separate, what we call buckets of money that is owed to you when you have a property loss, if you get that. So I've seen it at 25, I've seen it at 10, I've seen it at 5%. But as we all know, it can get expensive to rewire homes and whatever else you need to do to get it up to code. So. And let's see, okay. So if you do have a lot of properties and you just start adding them, you call up your agent, you say, hey, I got this new property, can you add it to my policy? Oh, sure, that's fine. Make sure that they have everything right, and make sure, first of all, that everything you say to your agent you have in writing of some sort. Don't just call them and tell them to add something. Make sure that you do have everything in writing. I had just talked to somebody 2 days ago that he thought his property was insured, but it wasn't. He said, well, I called my agent, and they said they needed to add a railing to my house, or, I just renewed it. They said, well, add that railing, and he said, everything's fine. Oh, it's fine, don't worry about it. Well, he had just had a fire, and he's not insured. So you just want to make sure that that information that you're telling them is written, so that if you do have to go back and dispute it, that you have language that says that it was. But yeah, addresses. A gentleman in Columbus, Indiana called me and said that he added property, and it was just a big old warehouse, and we had a storm and the whole roof blew off. It was like a $20,000 or $30,000 roof. And he said, well, I called my agent and I told him to add it, and then his business partner was looking through the policy, and she was like, they had the wrong address, it wasn't the right property. So of course they denied it. So, and it's unfortunate that I think all humans do this. You don't look at things until after the fact. So just being, and you don't, you're like, oh yeah, I guess I should go look at my policy. So also make sure that you have it listed as what it is correctly, rental, apartment, multifamily. And here's another one that you probably don't think about. When you get property, the named insured is whoever is insured on the property. It could say so-and-so LLC if you're doing it that way. It could say your name, but it could have your spouse's name on there. It could have your business partner's name. So if anything's happened between when you got that property or something changed, you're no longer married to that person, they're not your business partner, make sure that you get that changed, because if you do have a loss, that person's name's going to be on the check. And they have to sign off on that. So if you have any issues with them and you can't get them to sign off on it, and they're expecting money from it, obviously, if their name's on there. So I would highly recommend checking. Just make sure, and that usually is on your deck page when you get in the mail where it says your structure and amount and what you have. It should say right there that your name is the name insured. So all these errors will affect, and these are just kind of going back in. Every so often you'll get stuff from your insurance that says, you have this or that. If you don't look at it, which most of us don't, I just kind of throw it away. If there are some things in that may be a new endorsement of some sort, or saying, hey, we're not going to cover this or that. I've seen it where they don't want to cover terrorism or something anymore, or whatever. That automatically, after I think 60 days, goes effect on your policy. So you definitely want to look at it and know exactly what's on it. And if you ever do have a property loss, you want to get a certified copy of your policy, and that'll have all the updated information that's on it. So,
What exactly do you mean by certified copy?
just go to your agent and request a certified copy of your policy, and it'll have a stamp on it, and it basically states that is the most recent copy and has all the most recent endorsements on your policy.
Because I have a log one for my master company.
Okay.
And I can download, it automatically comes up, any new change, there's a new document
Okay.
shows up. Is that adequate?
Probably a lot of insurance companies are doing that now.
I
So,
download that and keep it locally on my phone.
right, it should be. I will say, if we ever sign clients up, we get you to sign, it just says your name and it says you're allowing us to request it. So we go directly to the insurance company and request it anyway, no matter what, so. But that's just what I usually say to do. But yeah, now that they're doing everything online, you can just pull it. A problem with it is, though, I've seen a lot of them, they're just generic information, but if it's specifically to your policy.
It says my name, address, policy number,
Yeah.
everything on it.
But is everything, the language within it, is it just kind of a generic, like,
It's
policy?
like 20 pages or 30
Okay.
pages. It's the same thing I get in the mail,
Okay.
just in a digital format
Yeah.
every time it renews.
Okay. That's really all I have, so. Yes, sir.
Got an old house, it's not insured.
Mm-hmm.
Is that gonna be complicated to take it and get it insured inside the vacant?
Maybe. Because it's older, it depends on the conditions it's in. I've seen a lot here lately. I've had a lot of people complaining about insurance companies are being very hard on trying to get insurance if it's whatever conditions it's in, just like that gentleman that wasn't insured because he needed a railing. So a lot of times they'll come out and say, no, but if you do this, this, and that, we'll insure it. That's where I would suggest you getting a broker that can shop insurance for you. That'll get someone that can do it. There is a real estate, they just deal mostly with real estate investors. They do a lot with vacancies. It's an insurance company, and I cannot remember the name of it, but I need to get that. I think they partner with RIA, maybe.
National Grid.
Is that what it is?
Who?
National Property Inspections, so.
I think it's like National Real Estate something,
Right,
yeah,
it's
yeah.
national something.
Yeah, and they're usually, I think they were at RIA, but they're good. They focus mainly on investment properties.
Right.
Yeah.
If you go to National RIA website, they're one of the sponsor members.
Okay. Yeah, if you will go to the National RIA website, they're one of the sponsors.
Any more questions?